So let's bring in Gary Kaltbaum, Nicole Webb, and Phil Blancato. First, okay, I want to know about the direction about this with the market here. Particularly, we'll know a lot more, folks. In 30 minutes, they're going to have the press conference. But let's talk about at least initial thoughts. I'll start with Phil here in the studio. Phil, so we got the balance sheet. It's going to come down, but not immediately. Did you infer that to be sooner rather than later?
I would, but it feels like it's a very dovish call. I mean, 25 basis points against 8% inflation, CPI, headline, core, PCE, across the board. That's what the market wanted. They got a dovish Fed. They're not going to be ultra aggressive. Not put pressure on more pressure on upward on interest rates. It means the market got what it wanted today.
You know, Nicole, maybe the Fed got, I won't say what it wanted, but certainly the Fed got an out when it came to the Russian invasion of Ukraine. Because prior to that, universally, everyone thought they would go 50 basis points. Do you think they made a mistake here?
No, I don't. I think that when we watch the consumer confidence index with the geopolitical environment that we've been navigating, and there's still a lot to be seen yet as we learn more, like you said, in about 30 minutes. It's really about the dot plot as well, this dispersion of the members. And so we learned a lot today. To that tune, the market did get what it wanted. And for that reason, I hope between this and the ongoing work towards resolution abroad, that perhaps we can see consumer confidence come back in light of everything.
Gary, something tells me you're not as sanguine about this decision.
Well, Charles, I'm actually thrilled today. I want you to think about this. I don't think Jay Powell and the Fed even matters at this point in time. I think he's taken himself and the Fed off the playing field. Why? The 2-year is at almost 1.9. The 5-year is almost as high as the 10-year. They are, I think I mentioned on Monday, they are just so far behind. They move up a quarter point, down a quarter point, up a half, down a half. It's not going to affect the economy in any way, shape, or form. The market is now doing the job, and they're just as far behind as possible. And he can talk blue in the face today, answer every question. They just don't matter. They're so far away. They are lucky, though. Oil prices have done a round trip from 90 to 130 on the Ukraine thing. If they stay down, that's the most important part of the equation at this point in time. And when Russia saves face in the next couple of weeks because they're getting crushed by their own stupidity and in the financial world, I think that helps also. And I'm no Norman Schwarzkopf, but I think we're getting close to that.
Yeah, you know what? I bet it happens in less than 2 weeks. But there is a market relationship. Now, we know, of course, the near term is dicey, right? And we know the market's already taken a drubbing coming into this. But what history shows us, by the way, 100% of the time is that 1 year later, when the Fed begins these new rate hike regimes, the market is higher. So, Nicole, based on that, are you taking any actions now saying, okay, you know, will the market historically has been higher? There should be resolution sooner rather than later with respect to Russia. What are you doing with respect to that?
Yeah, I feel like I've almost branded myself over the last couple of years as the person always wearing rose-colored glasses. But yes, again, what we're watching for, the irrelevance of the Fed, how far we are away from that 2.5%. What we see, though, we see underlying opportunity. There certainly are stocks that have been just battered in comparison to the major indices. Several of the tech names where we see just stable growth, free cash flow, and a lot of opportunity to be purchasing. But you got to look for those individual names, ongoing theme.
Okay, and Phil, of course, you got the 10-year solidly above 2%, but we do have the yield curve flattening. That's been going on. You know, listening to what Gary said, also understanding that the markets do typically rally after this. You think history repeat itself?
Without a doubt. Go one further. Anytime we've had a war conflict like this, we sell off 3 weeks into it. We rally every time out there other than World War II. You got two things on your side. Stocks are cheaper, Fed's accommodative, consumers ready to roll and spend a bunch of money with Omicron being past us now. This is a great opportunity to enter the market. I disagree with Gary. I think the Fed has given you a playing field to do well in stocks. I'm not worried about the U.S. economy. It's still the strongest in the world. And for that reason, play the cards you're dealt, which means go long equities here and enjoy the ride.
There's some other news out today. Gary, I want to ask you about this. China backing off its war on business. Get this. Now they're saying, hey, big tech Chinese companies, buy back your own stock. I mean, they're even eclipsing Democrats. And they're like, forget buybacks being evil. We made a big mistake, you know, because the KWB was like 100 almost a year ago when she called, triggered this war.
Unreal.
And then it got to 22. I mean, there's got to be some bargains there if you want to own these kind of stocks. Are you looking?
I'm always looking. Look, I have been bearish since I think December of 20 on China because A, the price action, B, because the government seemed like they were just taking out a machete and cutting them off at the hips, where things like symbols EDU and TAL dropped 90%. So they've changed their stance here. The stocks, I mean, Alibaba and Baidu, these things are down 60, 70. I have gone from being bearish to being less bearish. I don't know if I am bullish just yet because we still have a market we have to deal with overall. But definitely, I'm a big believer when the game changes, I have to, move a little bit. So I definitely did today, but I have not made any moves just yet. But I will tell you, I put Baidu, Alibaba, JD, and a few others on one of my front screens just to be peeking at on a daily basis. Yeah. And we'll take it from there. The problem with China is the news is fluid and they're flaky. Who knows what they're going to say tomorrow?
I do think fundamentally they're probably all screaming buys here. If you can deal with some of the other issues. Speaking of screaming, Delta just announced that they had of course they got a price hike going on, but they had their 2 best days ever with respect to booking. I bring that up, Phil, because you've been pounding the table on these reopening names. Yep. Airlines a part of that?
Absolutely. My favorite sector right now. Favorite stock selection you can go after. And there's a number of very good names in the space, Delta being one of them. You're talking about stocks trading below their PE with a chance to double, even triple their revenue from where they were in the last 2 years. The oil price, gas price is transitory. They can absolutely do very well in this environment. It's a great opportunity to jump on it right now.
Nicole, we had the retail sales number out today. It missed a little bit, but there was a gargantuan revision. Obviously, it's not adjusted for inflation. Phil said earlier that the consumer was in a strong position. Do you agree? Because I got to tell you, so far today, the number one sector are consumer discretionary stocks.
Yeah, absolutely. Not only is the consumer in a great position, but also, like you just mentioned, in terms of these travel stocks, Booking, Delta, they are ready to go. And I think looking back, there is still an unlimited amount of pent-up demand. If we think back even 6 months ago, it was a start, stop with the various variants. Now we're looking at a really opportunistic summer. We saw oil prices come down so dramatically and so quickly. And if we do have neutrality, some resolution abroad, then the worst of it is over. And here we go, another rally in consumer spending.
And of course, Gary, I didn't get a chance to ask you about these U.S. tech names today. Where are you there?
I am not bullish just yet. I think they're still rallying in a bear market. I think we got maybe a few more months of backing and filling, but leave no doubt, I keep telling you this, the 5 and 10 baggers of the next few years are going to be coming from growth technology areas where companies are growing 50 to 100% a year. I am every day looking at the IPOs of the last couple of years for valuations to come down because they came out at too high prices. And there's some companies in there, I don't want to mention just yet, that have double and tripling their sales every year. And if that continues, those are going to be big winners. They're just still under pressure right now.
Yeah, they're bringing them out too late and they're using it as a liquidity event. I feel
too high in price, my friend.
Yeah, it's awful what they're doing to the average investor out there. Silicon Valley and Wall Street should be ashamed of themselves because they're just really using them, and it's unfortunate. Let me ask everyone here. We're pulling back a little bit. Obviously, we were much higher at the open, and we're a lot lower even just since this show started. It's just this typical anxiety, Phil?
It is.
Or was something said so far, did something change already that's making people second guess?
The balance sheet comment. That they may start unwinding it sooner than we expected. And that does put a secondary pressure on upwards on rates. That's got the market spooked a bit here. Temporary, though. Market got what it wanted. Balance sheet issue aside, I think it's a temporary opportunity to see the market sell off here. But I still think you got a chance to enter the equity market here. Stocks are cheaper than they've been at any time in the last 24 months. I would absolutely take it.
You're willing to deal with the near-term uncertainty, volatility, even more to the downside to be positioned right now?
Yeah, I want to take advantage when things are on sale, and they're on sale right now. Let's put it this way, cheaper than they've been.
Right.
Not overly cheap, but cheaper than they've been.
Can I just say,
go ahead.
The Fed is going to do whatever, I guess we have another 6 weeks. Watch the 10-year. If it starts backing up to 2.5, 3, that's going to be a problem for markets. And it's a simple reason why Markets are used to rates much lower and easy money and liquidity. We've lost that at this juncture. And if rates go up really quickly from here, the Fed's going to have to move even quicker. And I'm not so sure market's going to like that. I'm always hopeful on corporate America, but we've been dealing with gargantuan, monumental, easy money for such a long time, and the market's got addicted to it. You lose that, that could be a problem.
All righty. And by the way, the yield curve also is really, really flattening quickly here. People are worried about the economy, maybe more than the Fed. Gary, Nicole, Phil, thank you all very, very much.